The fate of the euro and Greece's future within the single currency once again hangs in the balance, with talks yesterday between Greek Prime Minister Antonis Samaras and Eurozone Chief Jean-Claude Juncker, and a Merkel-Hollande meeting commencing today. But what effect is all of this having on the single currency? I'm joined now by Kit Juckes, Global Head of FX Research at Societe Generale. Kit, the big question here that a lot of people will be asking, can the euro continue to support Greece?
I think it can. I think the issue with Greece is the economic pain is going to remain incredibly hard to bear, and they need some respite. But there are still some within the rest of the Eurozone who want to use Greece for political purposes to send a message about the need for continued austerity in places like Spain and Italy. And I think that clouds the issue of the reality that it's probably more important to keep Greece inside the Eurozone at this stage than to worry about the cost of giving them some relief from the current austerity.
Should Greece end up exiting the euro, what will happen next economically? Will Portugal, Italy and Spain be next? And politically, Angela Merkel, it appears, is almost having to make the choice between the Eurozone and her government.
Well, I think to the first question, I don't think anybody knows, in the sense that everyone's hoping we can get to the point where Greece's departure from the euro is not seen as being necessarily contagious. I don't think we're there yet, for starters. And I think that's a bit unfair on Greek people, who are going to have a horrible time inside the euro, and they'll have a horrible time outside the euro as far as the economy is concerned. There is, though, still a need to avoid contagion, and there is still an enormous amount of money on the hook if Greece were to leave. So the cost of Greece leaving would be horrific, and Angela Merkel, I think, understands that. And while she can't convince everybody within Germany at this point in time, I think that's clear from the extent of her support for Mario Draghi at the ECB that it would suit her just fine for the ECB to provide some help in the form of even easier monetary policy.
But despite all of this, traders have shown optimism over rumours of ECB bond buying. This 7-week high against the dollar, can we expect it to continue?
Well, it is the middle of August, or a little after the middle of August, and the ECB meeting is on the 6th of September, so we've got 2 weeks when we're not going to get a whole load of news. Speculators have been short the euro, and you don't meet many euro bulls out there on any given day. Can potentially be squeezed a little bit further during that period, I suppose. We might see euro dollar just move sideways. We might see it spike a little higher simply on the lack of new negative news. It does all raise the stakes for September the 6th, however. I don't know exactly what the ECB has to do to satisfy markets, but unless they come up with something fairly convincing, that you could see a return of risk aversion. And even if they do commit to buying European bonds, I don't see why that's good for the euro. So I expect it to be falling again from the middle of September onwards.
You mentioned there that you are anticipating a drop. The euro's gone up and European stocks have held their gains following the Spanish auction. These speculative bubbles that seem to keep reoccurring, are they harmful to the overall picture for the euro?
I don't think that they're harmful overall. I think what we see at the moment is an environment where, with a remarkably healthy balance of payments in Europe, frankly, the euro would be a strong currency which would be economically unhelpful were everybody convinced it would survive. So the euro is going down slowly as people see the bad news, worry about its existence, and sell it. But it's a country with higher real interest rates than the United States, with a much healthier balance of payments than the United States, and like the Japanese yen, it may be doomed to being stronger than is good for it in normal times. So these kind of markets we have at the moment, that they deliver a weaker euro. What Europe needs is to marry the weaker euro with some lower bond yields and some reduced interest rate costs for the countries that are having trouble, and that would be a decent step improving the outlook for the whole region.
Kit Juckes there from Societe Generale in London. Stay tuned to Dukascopy TV for all the latest FX trading analysis and exclusive interviews. Thanks for watching and goodbye.